Okay, so that's all the logistics and housekeeping. Welcome again to our insurance options for small grains. Um, Advancing slides. My name's Anna Johnson. I am a policy manager here at the Center for Rural Affairs. We are a nonprofit based our headquarters is in eastern Nebraska, and then I work out of our central Iowa office. And just once more, for those who just joined, please feel free to ask any questions or put any questions into the chat or questions box. I want to make sure we're addressing what you're interested in. Before we dive into the material, I'll give you a little sense of kind of who we are as the Center for Rural Affairs. We're a nonprofit organization, as I mentioned, with offices in Nebraska and Iowa. And we exist to create vibrant rural communities, and we do this through three key strategies. One is small business training and lending, one is working with communities and farmers and ranchers, and then one is policy change. And we do this work because we believe that no matter where you live, you ought to have access to opportunity. And so crop insurance and risk management are a key piece of farm viability, and so that's why we have this webinar series this month. So that's a little bit about me. I would also like to get to know you all a little bit. So if you wouldn't mind, I have a really short 2 questions of poll. So let me get them going. So the first one is, if you'll indulge me and just let me know kind of what your experience is with farming and ranching. I think your screens all should show a little poll view. Yeah, okay, good. So just let me know. I'll give it a couple seconds so you can kind of navigate around and figure out which one describes you. Beautiful. Okay, so we have a variety of different experience on the call. This is awesome. And then one more quick question. What about your experience with crop insurance? It's helpful for me to know kind of where folks are coming from when we're presenting this. So take a couple seconds to answer this poll. Okay, wonderful. Well, thank you everybody for answering the poll questions. Double checking that you can see the screen again. Great. Okay, so it looks like we've got some variety of experience here around crop insurance. So thank you so much, and we'll keep going. So our goals for today, we're talking about an insurance option for small grains called Whole Farm Revenue Protection. And we'll be talking about, what is Whole Farm Revenue Protection? How can it protect small grains? And would it be right for your operation? And so we're going to kind of have 2 basic chunks to the presentation. One is to go over, what is Whole Farm Revenue Protection, and how does it, fit into the broader universe of insurance options for small grains, and what does it offer that they don't, and how does it work? And then we'll be talking about the enrollment process for Whole Farm. So some quick background. What is this? Is because we often have folks on these webinars that don't have much experience with crop insurance. So I like to start with, what is crop insurance and why do we buy it? It's insurance against farm loss, and it's a risk management tool. That is because we need it because farming obviously is very risky. There's all kinds of different loss, weather and market fluctuations, other types of risk that aren't listed here include like labor and other things, and liability. So crop insurance helps manage some of that risk, the risk involved with crop yield losses and with price declines, depending on the crop insurance policy. And so then buying crop insurance allows producers to have protection against that loss. So for small grains, what policies are already available for small grains? There are policies available for oats, wheat, barley, rye, and triticale, but they're not all available in every state. Those individual policies, and you can look up which policies are available for a particular grain using a tool online. If you Google the Actuarial Information Browser, and I think yes, there we go. I think you might be able to see my mouse. The name of this website is up in the upper right-hand corner, the Actuarial Information Browser. And what this is a tool that allows you to browse which policies are available. And so you have to first start by commodity. So this is a screenshot of, when I looked this up earlier. So looking up what policies are available for rye in 2020. For actual production history, that's APH. I think this is the only policy available for rye, and it is available only in these states that are listed. So that's useful to know. The folks we work with are, in Iowa and Nebraska, and you can see that it's available in Nebraska, but not Iowa. But then if you're looking to cover an oat crop, what policies are available for oats, there's an APH policy for oats in most states. In fact, they don't all fit on the screen. So this is a way you can kind of do a little bit of basic research if you aren't familiar with what policies are available. But what about, so obviously there aren't insurance options available for every small grain. And also there are other sources of revenue available for small grain that around straw and hay. One of the benefits of growing small grains is that if you can sell the small grain through the normal grain market. But if you're also trying to capitalize on the straw and hay that your small grain makes available, that can sometimes be harder to cover through traditional insurance. We didn't see a straw policy on there. So this is why we're talking today about whole farm revenue protection, which is a crop insurance policy that allows you to cover your revenue from grain, from straw, from hay, and basically fill a gap where crop insurance coverage otherwise does not exist. So just going to double check that I'm not getting any questions in here. If anybody has any questions, feel free to jump in. Okay, so diving in, what is whole farm revenue protection? First, some jargon clarification. Throughout the presentation, when I might say whole farm, you'll see on the slides whole farm revenue protection or the acronym WFRP, all the same thing. Just want to make sure that's clear going in. So what is whole farm? It's a revenue insurance product, which means that it's covering your revenue for the year, not your yields, but the revenue. And so if your annual revenue drops, it kicks in. This is the basic idea. So what is this, why is this helpful? By insuring your revenue instead of a specific crop, it allows you to insure commodities that can't otherwise be insured, such as perhaps, as we saw earlier, rye in Iowa, or, your straw sales that you're making. And so allowing you to insure that revenue, it decreases your risk level. And then allows for coverage of revenue from a variety of crops and livestock. So, and how does it, what does it cover? Getting a little bit more in the weeds here. Whole farm will cover the value in crops and livestock that you're producing during the coverage period, which is about a year. So it does not cover the value of commodities that existed before the coverage period. So it doesn't cover the grain that's already in your bin at the beginning of the year. But it can be used to cover the higher, the value of this obviously is that if you're producing higher value crops like an organic grain, say, it will allow you to cover that higher value because it's covering your revenue. So what does whole farm cover? Again, it's covering commodities that are produced during the insurance period, whether or not they're sold. And it will also cover commodities bought for resale. It'll only cover 50% of your revenue from those if you're an operation that purchases commodities for resale. Whole farm will, and then I know this is a small grains webinar, but just for completeness sake, whole farm will also cover all farm commodities except for timber, forest, and forest products, animals for sport, show, or pets. Some small grain producers have more diversified operations, so it's helpful to have that information in there. And then also starting in 2020, whole farm will cover hemp for producers in select areas, and you'll want to talk to an insurance agent to learn more about that if that's what you're interested in. So again, if you're growing a small grain and using the straw or hay, a whole farm will cover revenue from these. But if you're using them and feeding them on your farm and you're not getting revenue from them, you'll have to talk to your agent to figure out if that will how that fits into your overall revenue for the year and if whole farm will cover them. I pulled this quote from one of the fact sheets about whole farm on the official USDA website. Inventory adjustments are used to remove production produced during previous years and to add revenue for production that hasn't been harvested or sold yet. So the idea here is that, again, if you have grain in the bin at the beginning of the year, and that's not going to that you're not, creating value from during that year, you just haven't sold it yet, that'll get subtracted out. But, if at the end of the year you've put grain in the bin that you haven't sold yet, that'll get added into your revenue. So a lot of small grain producers also are, raising corn and beans, maybe perhaps more standard grain products. And so often folks are already buying coverage for those. And so can you use whole farm with that other insurance? The answer is yes. If you're already covering other crops with individual policies, whole farm is available as a buy-up option to cover revenue from other crops and livestock. So term here is buy-up if you want to talk to your agent about that. So what kind of loss will whole farm help me with? So it will cover a loss in revenue that's due to unavoidable natural causes during the insurance period. This is pretty standard with crop insurance. Crop insurance will cover losses due to these unavoidable natural causes. So this includes things like drought, excessive moisture, hail, wind, frost. It does not cover losses that are caused by such things as pesticide drift, because those aren't unavoidable natural causes. So if you're new to the crop insurance game, you'll want to make sure you talk that through with your agent before you sign up for the policy. Whole farm will also cover declines in local market price, unless USDA specifically determines otherwise. So basically, summary: what kind of loss will whole farm help me with? It will help with those natural weather events, and it will help with decline in local market price. And we want to talk that through with your agent. Okay, so if you're interested in purchasing whole farm, you want to make sure you're eligible, and these are the eligibility requirements. You have to be eligible to receive federal benefits. You have to be a U.S. citizen or resident, and you have to have Schedule F tax records for the last 5 years for your operation. The exception here is if you're a beginning farmer. I think I saw somebody on the line who is one of those who's been farming or ranching for less than 10 years, and so for you, you only need 3 years of Schedule F tax records, and other documentation may be acceptable, so you want to check with your agent on that. And I see a question from somebody. Ooh, okay. Is anybody else having issues with sound? Can you all hear me okay? If you can't hear me, keep putting comments and questions into the chatting questions box, because I want to make sure you guys can at least hear me. Okay, but if I don't, I'm not seeing anything else come up on audio issues, so I'm going to keep going. And double check my microphone. Yeah, okay, I think we're okay. Again, if you have any audio issues, chime on in. I'm going to keep going. Okay, so would whole farm cover my operations level of revenue? Whole farm will cover up to $8.5 million in insured revenue, and insured revenue is something that you calculate based on the coverage level you choose. So it's something that you agree on with your agent. Whole farm will cover up to $2 million in revenue from animals and animal products. There's a couple more limits on it, and then also up to $2 million in revenue from greenhouse and nursery revenue. And I think I mentioned this already, but if you purchase commodities for resale, it will cover up to 50% of the revenue from them. Okay. The questions box is very small in my interface, so it's hard to, I think we're doing okay. Okay. Thanks, everybody. Okay. Expanding on this idea, would whole farm cover my operations level of revenue? Are you planning to grow your operation and revenue next year? This is an issue for a lot of folks who are, their revenue for the last 5 years has been, fairly steady, but next year they're planning to, they've put in place various different infrastructure changes and changes in cropping systems and expecting their revenue to increase. And so the previous year's revenue is not a good predictor of what next year's revenue is going to be. Whole Farm has an ability to cover you if that's the case, and it'll still provide you with coverage. So you'll want to talk to your agent to learn more about how that works. They have a growth index built into the plan. And then the second point here, new for 2020. Because Whole Farm looks at the previous 5 years of revenue, what if you had a bad year in that last 5 years, and that reduces the average of the 5 years, and so it's again not a good predictor of what next year's revenue is going to be. Well, new in 2020, you can drop that lowest year from revenue. So that's a new improvement. Okay, so going back to kind of the two halves of the webinar that I mentioned. So I've gone over some of the basics of what Whole Farm Revenue Protection is and how it applies to small grains. And then now I'm going to talk about enrollment, which is obviously an important part to using the program. So this is the beginning to end. How does purchasing a whole farm policy work, which I find is helpful for folks who aren't as familiar with crop insurance. So first you find your crop insurance agent and you work with them to gather needed records to estimate your upcoming revenue, and you select a coverage level. And you sign up for it by the policy deadline, which is usually March 15th. For some regions of the country, it's January or February 15th, but in Iowa and Nebraska, it's March 15th, so which seems like a long way away, but it's really not. So want to get moving on it if this is something you're interested in. Then after you've signed up by March 15th, you file your reports during the season to document your actual production. You also pay your premium bill, you pay for the policy. And if you experience a loss, you want to make sure you document that immediately. But then at the end of the year, you calculate your total revenue for the year. And if it's lower than expected, then you file a claim on your policy. So beginning to end. There it is. So I'll talk through each of those steps. So first, find an agent. How do you find a crop insurance agent if you don't have one already? In order to purchase crop insurance, you need to work with an agent. Those are the people who sell the policies. And so there are a couple different ways to find somebody to work with. One way is to ask your friends in your network for recommendations. There's no requirement that your agent be located near you to work with you, although face-to-face meetings have their benefits. But I've met a producer who lives in the South and has their agent in Idaho. So there's alternatives out there. And some agents also, Whole Farm is available in every county and every state in the country, but some agents have sold more policies at this point than others. So it's also worth kind of doing some research and asking around to see who has maybe sold a couple more policies, because they'll have a little bit more experience with the program. RMA, the branch of USDA that manages crop insurance, they have a online listing of all the crop insurance agents out there, and it's called the Agent Locator Tool. If you want to Google it, we'll also put the link in the online when we post this online. But you can Google it yourself in the meantime, Agent Locator Tool, and you can look up who the agents are in your area. And again, really recommend if you've never bought crop insurance before and you're thinking about purchasing it for next year, today is really a good time to at least start this research process to find that person who you're going to work with, because it's the task of both building that relationship with your agent and getting the parameters of your policy together. It can take a little bit of time, and you want to make sure you kind of get the ball rolling on that now. So once you've identified an agent, meet with your agent, and you talk through what your expected revenue is going to be for the next year that the Whole Farm Revenue Protection Policy will cover. And so you'll go over your Schedule F tax records with them, and then you'll also go over some other records, which could include production records, price histories, invoices, inventory records, so that they can feel certain about that you have a solid expected revenue for the next year, and they and you both kind of can come to agreement on what that's going to be, so that they can offer coverage on it. And if you're somebody who sells in direct marketing, such as farmers markets, there are also forms available for tracking prices and income in those venues. So, if you have questions about that, follow up with us, and we can send you the links to those. Okay, so you've met with your agent, you're talking through what your expected revenue is going to be for the next year that you'll be covering with your whole farm policy. Then you also have to pick a coverage level, and 50% to 85% coverage levels are available under whole farm. Under other crop insurance policies, there is sometimes something called catastrophic coverage. If there's a total loss, that's not available under whole farm. So I want to make sure I flag that. So if you want to do a little bit of research beforehand, trying to estimate how much your whole farm policy might cost, you can use something called RMA's Cost Estimator Tool, that you can also Google, and we'll put the link in the notes later. And this is a tool where you enter in some of the parameters of your operation, and then it lets you know how much you can expect to pay on your premium. And also something to flag for this is that whole farm revenue protection premiums are subsidized by the federal government, so you're not going to end up paying the full cost of it. It's similar to all other crop insurance policies. You end up splitting the total cost of the premium with the federal government. Another helpful thing about whole farm, another appealing thing, is that actually when you are enrolling, the more crops and livestock, more commodities is the word that they use to refer to crops and livestock. The more commodities that you're insuring, the less you end up paying in your insurance premium. And this is up to 3 commodities. So if you have just one crop or livestock crop or animal to insure under whole farm, you get the lowest amount of subsidy, slightly higher subsidy if you're insuring 2, and then the highest amount under 3 or more. So once you've talked all of these parameters through with your agent, then you work with your agent to finalize your documentation. And again, all paperwork needs to be completed before March 15th, and you want to start working on it now. One of the things you want to talk to your agent is to get clear on what record keeping and reporting is needed throughout the year. Other crop insurance policies require mid-year crop reports. Whole farm requires a mid-year revenue report, so that's something to talk through with your agent. So hopefully you don't experience a loss and you have the insurance and you don't need to use it, right? That's kind of the best case scenario with insurance. However, if you do have a loss, I'll talk through a little bit of the loss and claims process. So within 72 hours of discovering that your revenue may be dropping below your insured level, you want to submit a notice of loss to your insurance agent. Maybe, that weather event hits that you were hoping didn't happen, but it hits. So you want to make sure you let your agent know, ASAP by submitting a notice of loss, and ask your agent for more details of how that works. But again, this is something that's good to research before, before you want to know about it before you need to know about it. So get clear on that kind of from the beginning. So then the next step is, again, since this is a revenue policy and this insurance kicks in if your revenue drops below a specific level. You don't know your revenue for the year at the time that weather event hits. You know your revenue at the end of the year. So at the end of the year, when you're filing your taxes and you're establishing what your revenue was for the full year, you do all of that paperwork, and then you can see if your whole farm policy is going to kick in, if your full revenue for the whole operation actually did drop below that level. And so that is when you file the full claim, after you've submitted your tax forms, and you file your claim with your agent. And then they work to process your claim, and hopefully it all works out and you get paid your indemnity. So that's a really brief overview. But again, the things that I was trying to share with you, which I hope you're going to be able to take away, is an overview of kind of what the crop insurance product whole farm revenue protection is and how it can be used to protect small grains, and figure out if it would be right for your operation. So I hope I've answered those questions for you. A few follow-up things. You should receive an email survey after the presentation is over. I think it is scheduled to come out tomorrow, so please take that when you see it. And please also feel free to reach out to us if you have additional questions about how whole farm works, or about crop insurance in general. And we have, and this is my questions slide. Give us a call. This is our number. This is my name and email. Reach out anytime. If you do end up looking into whole farm to decide if it's right for your operation, we'd love to hear from you and find out how it went. So with that, I will open it up for general questions. Anything in here that was confusing to anybody that I should revisit? There we go. Any other questions? from folks. Okay, well, I'm not seeing anything come up, but again, feel free to, again, email me or give us a call. And I really appreciate you taking the time. I hope this was helpful, and hope you all have a great rest of your day. Thanks so much.